This is an extended edition of Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from our nation's capital in Washington, D.C. Good morning to you all. Together with Tom Keene, I'm Jonathan Ferro. Bramo out of the building. Lisa back with us next week. A special hours extension for us both, Tom, on Bloomberg TV and on Bloomberg Radio going into the opening bell. 30 minutes away.
The opening bell, we're going to focus on the markets here, and of course, a really better equity market over the last number of days. But what we need to focus on is the gift in Washington of a Shakespearean drama in London earlier this morning.
Is that what we're calling it?
Yes.
How many Shakespearean dramas have we seen?
It was
in London
Richard IV or Richard VII. I can't remember which one it was. I used the Cliff Notes. But the answer is that was historic, what we saw this morning.
Prime Minister resigning, and we'll catch up with Francine Lacroix in Westminster in about 20 minutes or so. We need to talk about the interview we just had with Heather Boushey.
Yes.
Of the White House, and push forward to Brian Deese, Tom, of the National Economic Council. We'll catch up with him in about 30 minutes' time.
They're talking points, and we were trying to get Dr. Boushey off the talking points of this is the plan, this is what we're going to do, with a nation that said, wait a minute, you had a plan, but you haven't done it. To give the president and any president credibility, we're talking 200, 300,000 jobs still being formed out of this once-in-a-lifetime pandemic.
And for that reason, many people on Wall Street expect this Federal Reserve to keep on hiking. We begin with the big issue, questioning a hawkish Fed.
The market is really pushing the Fed right now.
The Fed is telling us that they want to go to 3.8% by sometime in early 2023.
The Fed may need to slow down its rate hikes sooner than later.
The two-year yield is over 100 basis points below that level right now. This doesn't make any sense whatsoever.
How much longer is this rate hiking cycle going to last?
The bond market is saying that probably we peak at some point in December.
We know that the Fed are going to be hawkish now.
Is 75 basis points baked in the cake already for the July Fed meeting?
Absolutely.
But the market's more forward-looking than that.
They may top out at 3.5. I think it's going to be hard for them.
We've already seen that type of price dynamic.
The market has readjusted their expectations quite significantly.
The market can price peak hawkishness well ahead of central banks.
The latest Fed minutes suggesting they would have to raise rates even faster, perhaps by another 50 to 75. Officials zeroing in on surging prices and the potential for entrenched inflation. Mike McKee reads those minutes. Tom Keene does not. Mike McKee joins us right now. Hey, Mike.
I'll give Tom the Cliff Notes version. Guys, the mistake that economists and investors are making is quoting the Fed minutes in current time and trying to apply those to the future. There isn't much that you can say that has held steady since then. If you were going to take one comment out of the Fed minutes, it would be this. Participants concurred that the economic outlook warranted moving to a restrictive stance of policy, and they recognized the possibility that an even more restrictive stance could be appropriate if elevated inflation pressures were to persist. In other words, we're going to get it done, we're going to bring down inflation, we'll do what it takes, but they have told us that. The economy has changed since then. So I look at this quote, which people like to attribute to John Maynard Keynes. No evidence he actually said it, but it's a good quote. When the facts change, I changed my mind. And the Fed is faced with that right now. We've got a lot of data that has already come in suggesting the economy is weak and suggesting the economy is fine. And now we have some more data coming up that are going to be really decisive for the Fed, including the June jobs report, the June CPI report, the jobs report, of course, on Friday, retail sales, and then the Fed meeting is the 27th of July. And they're going to have to sort out whether or not they need to continue being aggressive. Watch that CPI number for a clue there. And don't anticipate that the markets are going to stay where they are. They're going to move around an awful lot.
Mike, given the slew of economic data that we're going to see, it comes down to Fed speak. Who should we listen to or listen for in the coming days and weeks to get a nuance of what the Fed's thinking?
Boy, did you tee that one up, Tom. Today, we get the St. Louis boys. We get Chris Waller, the governor who came from the St. Louis Fed, and Jim Bullard, who is the president of the St. Louis Fed. They've been the ones who've been out front in noting changes in the economic, as Bullard says, regime. And they're the ones who you might want to watch for clues to where the rest of the committee may go. And of course, if anything comes out of Jay Powell, you got to pay attention to that.
Michael McKee, thanks so much. Greatly appreciate it. What he just said, John, is absolutely critical here to Bullard in the regime change. Are we at a point of a regime change?
Let's be really clear. Credit to Jim Bullard of the St. Louis Fed. I was very critical of Jim Bullard going through the pandemic, at least the very beginning of things as that started to unfold. I thought a conversation he had going into that was almost tone deaf. This time around, he has really led the way, Tom.
Yeah.
On front loading, on the problem that we had in store. He pushed to try and remove QE a little bit earlier. That didn't happen. He's a man we've still got to listen to.
And this is interesting because Heather Boucher was just with us, New School of Social Research, sort of an urban inequality analyst. He's a hard-nosed Indiana PhD, and he's much more in touch with the fabric of America than the wonkiness around the table at the Eccles Building.
Where's this music coming from? What's that?
I don't know.
If they can hear that on TV
maybe
and radio.
maybe the entourage as Anne-Marie moves to the White House.
They follow her with music.
Yeah.
They play for that.
On radio here
every
across from
morning.
Lafayette Park, the White House, and all Anne-Marie Horton making her pilgrimage over to 1600
Very cool.
Pennsylvania
I love that
Avenue.
she has a band that walks
She
with
has
her.
a band that walks with her.
Pretty impressive stuff.
Should we get back on track here?
We could try.
Let's
Joining
try.
us now is John Hancock's Emily Rowland, Chris Harvey of Wells Fargo. Emily, we're not going to ask you about what's happening in the UK. Don't worry, I'll start with this market. We've had 3 days of gains. We've got another morning potentially of the S&P 500 claiming. Can you help me understand whether this is a bounce that you want to get behind?
Yeah, we wouldn't overplay it, John. We're seeing a bit of a relief here on the inflation front. Clearly, oil prices coming down are a really big deal. The economic data is pretty decent here, but we've got a lot coming up. Mike McKee mentioned CPI. We've got earnings season starting next week. We think there's going to be a big challenge here to profit margins as we move through. It's going to be really challenging given higher input costs, higher interest costs, higher labor costs. So a lot of big catalysts in the market coming up over the next couple of weeks. We wouldn't get too comfortable. There's been a lot of people that seem to be kind of not paying a lot of attention to the inverted yield curve, which re-inverted over the last couple of days. We know that typically precedes a recession, so don't get too comfortable here.
Chris, what are the nuances of the last number of days up we've seen? Which sectors are leading the way? Is there a distinction you can make there?
Tom, one thing I would say over the last couple of days is the equity market is more of a growth market. And what we've seen is we've seen rates come down. And as rates come down, growth is doing better. And so that's dragging the market up. And believe it or not, this time, at least in the short term, bad news is good news. But I would echo Emily's sentiment. We can't get behind a rally just yet. You're going to have some big rallies, some face-ripping rallies. You're going to have some big sell-offs. But at the end of the day, what you need to see is you need to see the Fed toggle down from 75 to 50 to 25 before you can see a sustained rally.
Chris, have you got an idea of what brings about that change for this Fed? Is it in the data? Is it a pressure point in the market? What is it?
John, I really wish I knew. And let me explain why. I cannot handicap Powell. I have no idea why he shifted back in January 19th. I have no idea why he shifted earlier from inflation dove to inflation hawk, right? It's not based on the data that I'm seeing. The data I'm seeing is saying commodity prices are coming down, energy prices are coming down, break-evens are coming down. The consumer is reacting to price, something they did not do last year. Everything is saying inflation is abating. I just can't handicap Powell because in the past, I don't know what makes him change.
Right. Emily Rowland, if inflation is abating, what has it done to an analysis of the revenue across all the different sectors of the earnings we're going to see? Do you bring down your revenue guesstimates as you try to game out what to do in the second half?
You know, inflationary pressures are coming down, but they remain incredibly elevated. And we do think that that's going to be a challenge to profit margins, which are sitting at the highest level since the 1990s right now. 13.2% for the S&P 500. That's got to come down as we move through earnings season. But we do think that there are companies with great balance sheets, good return on equity, lots of cash on their balance sheets, which if frank and the baby that's been sold off with the bathwater. So we're looking particularly at higher quality companies, which we do think can actually fare really well as we head through this earnings season.
Emily, can you talk to me a little bit more about earnings season? You mentioned there where you think we could have some success. I want to understand the really hard question and try and answer this for me. Have we priced the shock that is coming through the retailers yet? Because when we hear from
Good
them,
question.
the stocks gap lower, and then we hear from them again, and the stocks gap lower, and then some people tell me, well, we understand this story. We've heard it so many times. We've been talking about it forever, and yet, Emily, it doesn't look priced every time we get a little drip feed of information. Is it priced?
Yeah, I think that's fair, and it probably isn't as it relates to retail. There's a lot more pain to come to the consumer as they shift from a mindset of the things that they want versus the things that they need. And we're going to see them eschewing the things that they want. And that's clearly impacted retailers. It's also a double whammy because they're getting hit by the fact that they've built up their inventories too much and now demand is slowing. The thing to remember, though, is, and Chris made a great point about growth stocks bringing the market higher, retailers are a pretty tiny part of the S&P 500. So when we start to look at earnings season, the impact might actually be minimal. And we're more watching the tech space, the financial space, for clues about where the broad market goes from here.
Emily Rowland, Chris Harvey, to the both of you, thank you. They'll be sticking with us as we try and work out what's next for this market. Looking ahead to next week with CPI and DEG and earnings from JP Morgan and the big banks as well. Futures right now up 0.5%. Check it in on the markets for us going into the opening bell 19 minutes away. Here's Katie Lyons.
Yeah, less than 20 minutes to go, John. And we are looking potentially at a fourth day of gains because right now futures are in positive territory by about 17 points or so, up about 0.5% on S&P futures. Of course, it is recession talk, but also politics that are dominating the conversation, particularly in the UK, where Prime Minister Boris Johnson said that he is stepping down as party leader. Right now, the cable rate trading in and around 119.49, so it is a stronger pound, though, again, we're at 119, so we have to keep that context in mind. As for the bond market, you are still looking at an inverted yield curve. Right now, the 10-year Treasury yield trading around 294, but that's about 4 or 5 basis points below that of the 2-year yield, so that really reflects the recession or at least slowdown fear that is out there. And then pay attention to oil. I know, John, you were trying to get used to a 99 handle on crude. You didn't have that much time to get used to it because we're back up north of 100, 101.27 on WTI at the moment. As for some stocks moving underneath the surface, semiconductors, a big group outperforming today. Thanks a lot to Samsung, posting stronger than expected revenue growth in Asia overnight. That's lending boost to the demand picture, or sentiment around the demand picture for chip stocks. NVIDIA is up, as is Applied Materials, each north of about 2 percentage points. You also had some news out of China, in particular, reports that they are looking at more stimulus. That could boost demand for some of those base metals. That's lifting the likes of Freeport-McMoRan up about 5%, and CGen moving higher on a takeover potentially from Merck. John.
Kelly Lyons, thank you. Counting you down to the opening bell around about 18 minutes away. Coming up on this programme, we head to the United Kingdom with Prime Minister Boris Johnson announcing what many people expected him to announce. He's stepping down.
It is clearly now the will of the Parliamentary Conservative Party that there should be a new leader of that party and therefore a new Prime Minister.
We will have a new Prime Minister. What we don't know is the timetable for a leadership transition. We do know this, though. The Prime Minister will be meeting his cabinet in around about 47 minutes from now. From Washington, this is Bloomberg.
It is clearly now the will of the Parliamentary Conservative Party that there should be a new leader of that party and therefore a new Prime Minister. And I've agreed with Sir Graham Brady, the chairman of our backbench MPs, that the process of choosing that new leader should begin now. And the timetable will be announced next week. And I've today appointed a cabinet to serve, as I will, until a new leader is in place.
What an eventful day for the Prime Minister, Boris Johnson.
Stunning.
That from just 2 hours ago.
Wow.
Tom, we understand he'll meet with his cabinet in about 45 minutes. Someone joked with me almost immediately. He'll meet with who? How big is that cabinet as things stand?
Well, we don't know. And what I would say for our American audience on radio and TV, and John, brief me on this, is the speed of polling in the United Kingdom leaves America in the dust. Camilla Turner at the Telegraph, and I'm sure others are doing it right now. They're out in the last 50 minutes. I mean, they just took the podium away. Larry the Cat helped with that. 13% for Ben Wallace, who we've talked about this morning.
Sure.
Penny Mordaunt, who I think Francine knows, 12%. Mr. Sunak, 10, et cetera, et cetera. But it's the speed of this gamesmanship within the parliamentary system. Are you surprised by that?
No. We've seen this so many times.
This is the way it goes.
I mean, we're used to this now, aren't we?
Help me with this. When you leave 10 Downing Street, it's not like a big deal. It's like, you pack up your bags and you go.
Well, we have a tradition that when you're done, you're done. We have that tradition. Also, the Conservative Party has a history of this. It can get pretty vicious within that party.
Okay, I'm just looking
at
the
polls.
I'm done with the YouGov poll.
I mean,
Francine lives this. She lives it.
Francine's living it right now on Abington Green. Francine, let's talk about it. We've heard from the Prime Minister. What do we understand the timetable currently is for this leadership transition?
Well, so first of all, it's extremely unclear what the rules or what will be in place in terms of when they start voting. What we understood from that speech, and I thought it was extremely significant that he did not apologize. There was no hint of this was my fault and it's right for me to go. He blamed his party. He said, I tried to stay on because that was the right thing to do, but my MPs will not have it. Now, in terms of timetable, it's very clear that if the party does want to get rid of Boris Johnson, who at the moment will stay as caretaker until they find a new leader, that should be before October. But if the party wants him earlier gone, what does that mean? And then in terms of when the voting process starts, so we know that MPs will vote 2 or 3 times. Before then, the 200,000, of course, Conservative members vote on the final 2 names. We'll know more next week about exactly the timetable and process of that, but it's not a fast thing. It certainly takes at least a couple of weeks.
Francine, wonderful coverage, as always, from you. Look out for Francine's coverage through the day on Bloomberg TV and on Bloomberg Radio. TK, that's the direction of travel for this Prime Minister. He heads towards the exit door. And then whoever comes through has got to confront the same problem the rest of Europe is confronting right now, and the United States for that matter as well. It's inflation. It's inflation.
You're trying to be serious here. Bloomberg UK now out front with an important brief, John, of where the Queen plays her constitutional role within this crisis.
The stage is yours.
To be clear,
walk us through it.
She plays no part in this process.
A ceremonial role. Can we call it that?
She'll greet Mr. Johnson at some point as he says goodbye.
Something like that, yeah.
Okay.
What's the next step after that?
The next step is you move on to something dry as dust with Chris Harvey and Emily Holland. Let's do that right now.
Did you not see this episode in The Crown? Is that how you don't know?
No, I just think it calls for another season of The Crown right now. There's no question.
Chris Harvey, Emily Rowland with us. I've promised them we won't talk about British politics. Emily, I want to talk about this though, the state of Europe. This economy, and I'm not talking about the UK, I'm talking about the Eurozone, is facing some real problems right now. We had a guest, Patrick Armstrong of Plurimi Wealth, earlier on Bloomberg Surveillance, who suggested that economy is already in recession and that it's too early to step in, and this ECB, if it hikes, they'll get stuck at 0. What's your interpretation of what's happening there, how policymakers will respond to it, and whether you want to put a single dollar to work in that market?
Yeah, John, I thought we were going to get a chance to talk about the men's semifinal at Wimbledon tomorrow, but, we can save that for another day. Europe is in a tough spot right now. Policymakers, central bankers in Europe are going to have a really, really tough time, raising rates into an incredibly, significant slowdown in economic growth there. We are underweight European equities versus the U.S. If you want to own quality stocks, again, great balance sheets, good free cash flow, good return on equity, the U.S. is the poster child for that. When you look internationally, you're going to get a lot more cyclicality. You're going to get a lot higher beta. You're going to get a lot more economic sensitivity just investing in an index there. If you want to invest in non-U.S. equities, if you want to invest in Europe, we would take a very high quality, very, very defensive approach there today.
Well, Chris, do you have an understanding of use of cash by corporations into this earnings season? Or are we going to have to listen very carefully? We have the Dow Jones Industrial Average back above 31,000. As Emily speaks of quality, Chris Harvey, do you look at quality to deliver use of cash?
As far as use of cash, we're seeing 2 different things, Tom. There's a lot of cash on the balance sheet. We would expect at some point in time a lot more M&A to happen, right? But bid-ask spreads are pretty wide. The second thing we would expect to see is buybacks occur. But we're hearing kind of a divergent view. Some people are saying, hey, we want to save our cash because we're not sure the economic outlook. We don't want to burn through it. Others are taking this as an opportunity to buy. So overall, we're seeing some cash being put to work, but unclear how aggressive people want to be. And I think you have to get through this earnings season before people make some major decisions I won't expect a lot of M&A in the short term. But if things clear up on the geopolitical side, if rates begin to normalize, I would expect to see a lot more M&A in the back half of the year.
Emily, you get the final word. Can you explain to Tom who Rafa is? Because in the last hour, he just shrugged his shoulders at me and gave me a blank look, a blank stare, as if to suggest he had no idea who Rafa Nadal was.
Are you kidding me? He just made his 38th straight men's semifinal. That is like a heroic sports endeavor that cannot be matched by anyone else. I cannot wait to watch tomorrow. I will, of course, be watching the jobs report at the same time, but that might take priority.
Emily Rowe and Chris Harvey. 8:30 Eastern time. He's set to play Kyrgios tomorrow, Tom. At the same time, we get the payrolls report. So to both of you, thank you. If he's fit enough, apparently a bit injured yesterday, some kind of abdominal strain. Yesterday.
It's tough, whether it's clay or grass, and the difference between clay and grass is ginormous.
As you know.
It's like huge.
He's got a massive topspin game and got to play a little flatter.
First time I ever played on grass, I remember the ball hit the grass, and it went for like 3. I was like, oh, that's different.
Can you explain to us the last time you played tennis?
Yes, it was a Schlesinger championship racket.
Wooden rackets?
And wooden rackets,
of course.
And there was a little fuzzy ball. And if you didn't wear whites, you couldn't step on the court.
Very nice. Very traditional.
A few years ago.
Nice. Do you want to name the court?
A few years ago. Oh, we went from country club.
I'm sure you did.
Country club.
That doesn't shock me at all. Coming up, Brian Weinstein of Morgan Stanley on this fixed income market. Looking forward to that. And Brian Deese, the National Economic Council Director, a conversation you do not want to miss right here on a special extended edition of Bloomberg Surveillance live on TV and radio, right here from Washington, D.C. Live from the nation's capital this morning. Good morning to you all from Washington, D.C. Look at Wall Street now ahead of the market open with futures positive 0.5% on the S&P 500. On the NASDAQ 100, up 1/3%. That is your opening bell with equities just a little firmer. A euro with a 101 handle. Get used to that, apparently.
And the Dow up 200 points.
That is the first time that's ever happened in this hour on Bloomberg TV. I'm sure it's happened many times on Bloomberg Radio.
A number that America can understand, folks. The Dow Jones Industrial Average beneath the 36,000 level.
You're going to keep winding me up for the next 30 minutes. Let's talk about this bond market. 293. 293, Tom, on a US 10-year, and a bit of curve inversion out there too.
Very seriously, for global Wall Street, what we've seen here in the last 24 hours is further inversion, and I really want to emphasize to the pros, each basis point below flat zero parity really matters.
If I knew you'd be quoting that Dow, I would not have agreed to this, Tom. I would not have agreed to it. I imagine you're going to get about 20 more Dow quotes before this is finished.
Can you get Anaconda Copper up there, please? That'll help
okay,
out.
Let's get to Kaylee Lyles for more. Hey, Kaylee.
Hey, John. Well, we are actually seeing oil rebounding as well. $102 a barrel is where we trade on WTI. So no surprise, it is the energy sector that is outperforming at the open. And that's reflected in some of the individual movers like ExxonMobil, which is up more than 3% early in the trade here. You also have some of the more industrial metal tied stocks moving higher as there's stimulus talk out of China. That's lifting the likes of Alcoa up about 7%. And then for some of those more idiosyncratic stories, Bed Bath & Beyond is one outsized mover higher this morning. It's interim CEO. Other directors are buying up the stock after a 70% decline so far this year. That stock is up about 4%. And finally, GameStop. You know it, John and Tom. I know it. A stock split doesn't do anything for the fundamentals of a company, but yet the news of a 4-for-1 stock split coming from GameStop, the idea that maybe that makes it easier for retail traders to buy this stock, is lifting shares this morning up to the tune of nearly 7%, John.
Katie Lyles, thank you.
Are they still memes? Are they still meme stocks?
Katie, thank you very much. I think people refer to them as meme stocks.
They're still meme stocks.
Sure.
Okay.
This is making it sound like we're really on top of this. You do realise that.
I know. On radio and television, what is so important here is to be fair and sometimes balanced. And we do this with John Ferro. I was so rude on July 4th. Thank you for the huge response from the United Kingdom. We did note that the colonies won the war back a few years ago, 1787. But to be fair, we also need to note on this wonderful visit to the Hay Adams and the history that we see behind us, that on August 24th, 1814, the British torched the White House. I just want you to be careful. They torched the White House.
Okay, let me share this with you. In my education, I don't know if it's true of British schools still, we weren't really taught about any of this.
I know.
At all. They didn't really tell us any of that stuff. So when it came to Independence Day and the celebration you have, we have no problem with it whatsoever. I'm very happy to wish my American friends a long weekend and a happy 4th.
Well,
why would you think that we would be offended by something that happened that long ago?
Because we believe in the Founding Fathers. Seriously, it's a huge part of our judicial debate right now. But we have an authenticity on Bloomberg surveillance because we know our history, both British and American.
And this is an authentic, original program, that's for sure. Let me share this with you. I just had a sneak peek of CPI next week. Headline in the survey. Early days, hardly any estimates in, but on the headline number, do you want to know what that number is right now?
Double digit.
In our survey, 8.8%.
Wow.
Just another tick higher. Now, Wall Street, we know, will be trading off the month-on-month core figures. We get all of that. But that headline number, Tom, we're looking for an 8.8%. As things stand, and that can change as we build out the survey a bit more.
Folks, we're data dependent. That's what it comes down to.
Very much so for this Fed too. In Sun Valley, let's get over to Ed Ludlow for a little bit more. Ed, we're told the main event isn't today. It's not even tomorrow. It's over the weekend. Tee things up for us.
Yeah, so sources telling me that Elon Musk will arrive probably today, Thursday, and he's going to speak on Saturday, give a presentation of some kind. We don't know the content, but that's the slot that's normally reserved for one Warren Buffett. Warren Buffett always speaks on the final day of Allen & Co.'s conference here in Sun Valley. Interesting, you're talking about inflation. Inflation's really top of mind here, but so is the spending power of the global consumer. And I was watching Samsung overnight, right? 21% jump in quarterly sales for the June quarter. They are the bellwether of consumer spending because of electronics. And that better than expected sales helped by the Korean won. You see the NASDAQ 100 up higher, chip stocks driving that during Thursday morning session. Everyone's paying attention to stuff like that here, John. They're looking at their industries. These are TMT executives. They want to look at signs in the semiconductor industry where we've gone from a deficit of available chips to a glut, and things are looking more positive in the moment.
Ed, what does the famed Ludlow humility meter say in Sun Valley? If we've had the challenges of Netflix, the challenges of Amazon really struggling and moving cardboard boxes, what's the humility level you're acclaimed to measure?
Everyone is high-fiving, Tom. They're out on their mountain bikes. What I'm told by return attendees of the Allen & Co. conference is this is like it was pre-pandemic. They're paying attention to the short-term volatility in public markets, but they're positive. You know, David Zaslav, Warner Discovery CEO, is kind of king of the hill because his company went through a successful merger. He's optimistic about how they're faring, even with a sort of cost-cut reduction program going on in the background. And then the titans of last year, you'll remember, Tom, you and I spoke last year, and you reminded the audience of what a fantastic skier I am with the mountains behind me. But Reed Hastings, Ted Sandros at Netflix, they were the kings of the hill last year, and they're having a much lower profile visit this year. But all the same things are happening, the same meetings in the corridors, the same talk of the global economy, but with optimism.
There we go, Ed Ludlow. That must be the one place on the planet where they're running around high-fiving each other.
Could you see me and you going to Sun Valley? No. First of all, we'd have to wear ties.
I thought they wear those vests.
Well, I'm not going to wear some stupid Patagonia vest, you know, look like a beach whale. But the bottom line is, John, the bottom line is Ed absolutely nailed how they are so removed from reality.
How do you expect me to speak after picturing you in a Patagonia vest like a beach whale?
How many people, seriously, folks, Zaslav at Discoveries, there's some amazing challenges there.
Sure.
Warner Discovery merging and all that. They're going through serious cost cutting, and they're out there wanting beach.
Can you go to our next guest?
Okay, well, I'll go to Brian Weinstein right now, who's going, do I have to talk about Sun Valley? No, hopefully I don't.
No, please don't.
Brian, good morning to you, and thank you for joining us. We're a little punchy here. It's been a hugely political day for us. When we look at the markets right now, they're going to come off a jobs report. It is a jobs report. It's not historic, but it has a certain weight to it. How do you trade off this jobs report? How do you reallocate off this jobs report?
I think the market is still coming to terms with the Fed and the slowdown, and the idea that we're just going to easily hike and then ease. There's the bond market has a lot of adjusting to do. So I think this report will give us a slight window into what's coming, but it's not going to settle anything. I think the markets are going to be just as unsettled after the number tomorrow as they are today.
Just reading another downgrade, Tom, from the S&P. John Stolfus of Oppenheimer. Did you see that one coming? I think many of us were waiting for it. 4,800 is his new price target. The previous read from him, the previous target, 5,330. Of course, as we know, we had Jonathan Gold of Credit Suisse come down from 4,900 to 43. So still pretty bullish, John Stolfus, looking for 4,800 year end. Brian, I've been catching up with people in the bond market. And as you know, one of the questions we've been asking is whether we've seen the high on the 10-year yet for this year. Now, I think a lot of people in this equity market would take comfort from that. If you think we have, do you think we have?
I'm not sure we have. I think we may have come close. I think we have to revisit it. I think we got that nice bounce off of that 350-ish level, and stocks felt better about, again, the ease that's coming. I read the Fed minutes yesterday and look at the data, and I don't think it's going to be that easy. I think inflation is not going to slow down as quickly as they wanted to. Growth is certainly slowing, but I don't think it's a disaster. So technical recession maybe, but is the Fed going to stop? No, and I'm not sure we've seen the highs yet.
Brian, there's a partition seriously at Sun Valley between companies minting money down the income statement and a lot of others, maybe with some good revenue pop, but that's about it. In the recovery out 1 year, 2 years, when Mike Wilson tells us that it's finally stocks up, will there be a partition between free cash flow and those that don't have it?
I think so. I mean, the way we look at it in the bond market's a little bit different, but certainly I think that the idea that we're going to get free money again, the idea that you can buy any bond and it's not going to default, I think that's going away.
Yeah.
Which is why I think you're seeing junk bonds struggle, which is why you're seeing loans struggle a bit. There's great value out there, but there's also great danger, right? So the idea that you can just buy any bond and that you're going to be okay, to answer your question directly, I think cash flow is going to matter, and it matter a lot.
Well, I wanted to bring this up, Brian, because it's so important to the bond market. Is the surprise going to be the issuance of more debt by the haves, by the companies with huge free cash flow?
I think they'll continue to issue. I'm not sure it'll be a big surprise. I think people are going to be surprised at how much the curve inverts, and that means that's okay. I mean, it's not great, as you say. It means recession, but as far as being an issuer, you can issue out the yield curve, right? These are still historically low rates. Companies are still growing faster than the rate they're going to issue at. So I expect that we'll continue to see issuance out the yield curve from those companies for sure.
Brian, if you don't think we've seen the highs on 10-year Treasury yields, do you think we've seen the wides on credit spreads?
No, I don't think we've seen the wides on credit spreads. Again, in a default-adjusted environment, at 4% high yield, a couple of months ago, and everybody wanted it, people were expecting a 1% default rate, and yields in places were negative. With yields positive and yields positive across the globe, and default rates going up, I think you're going to see wider spreads still. So I don't think we're done yet. And again, with the Fed hiking rates more and the uncertainty out there, I think we've seen probably the worst of it, but I expect spreads to keep leaking wider.
Brian Weinstein at Morgan Stanley. Wow. Those two takes from Brian Weinstein just there. Tom, if you're an equity bull, can you take any comfort from one, Brian Weinstein saying, I don't think we've seen the highs on 10-year Treasury yields, and two, essentially off the back of that, suggesting he doesn't think we've seen the wides on credit spreads either. If you're long equities and that call materializes, we got a problem, haven't we?
I must say we need to see the credit spreads level or come in, I should say, if we really want to get more of a bullish tone. We're not there yet. The last couple of weeks have been really ugly.
It's been tough,
We're weak at this without Abramowicz here, but
We'll be better with Lisa next week when she
will.
comes back. But on the credit front, as you know, and we talked about it with Lisa last week, we've taken out levels that we took out back in 2018 that forced this Federal Reserve to rethink its tightening. This time around, because of the inflation backdrop, that so-called Fed put is in a different place. Some people might say it's retired and it will take a lot for this Fed put to come out of retirement.
I believe in the power of the institution. I would suggest the put can still be there. I talked to Lisa last night, John, about CDS and Crete, and she said there's enough momentum there. There's enough dynamics, if you will, there right now that off the jobs report and on a bullish recovery framework, you need to have her world improve.
You brought up CDS and Crete, and I know you're joking. but thinking of Greece and perhaps going across to Italy and over to Switzerland too. Have you seen the CDS on some single names, on some European bank names?
The bank names are frightening.
Tom, we got a problem in that economy.
Yeah, this is frightening, and we like to be polite here, and when we speak to people from continental Europe, maybe we don't mention individual banks. It's maybe a bit rude, but for global Wall Street, the CDS value on the Bloomberg terminal right now is front and center, absolutely.
Without a doubt, without a doubt. Front and center for us is the White House, and coming up, the Biden administration facing surging prices and a slowing economy.
The president is not shockingly naive, and we are in this moment of global crisis in terms of energy, and he is using the tools at his disposal to make sure that the prices that people pay at the pump are fair.
We'll get the view from the White House with the National Economic Director, Brian Deese. That conversation is coming up next. From Washington, D.C., this is Bloomberg. Live from the nation's capital this morning, a good morning. Together with Tom Keene, I'm Jonathan Ferro. With equities up, let's call it 39 points, up 1 full percentage point, TK. I make that day four. Day four of grinding out some gains, TK.
I think it's
going
about
into a big print tomorrow morning.
Certain tea leaves, inflation rolling over a little bit, certain indicators of things are better. It's 1600 Pennsylvania Avenue. I believe a gallon of gas is not as painful as it was 10 days ago.
We're moving things gradually in the right direction.
Gradually.
I don't think
we'll
anyone in that
it's
building
better than
behind
going
us
the other way.
wants to declare victory just yet, that's for sure.
Well, there we are. And of course, on a trip to Washington and with the drama that we've seen in the United Kingdom today, we need to drive forward the conversation on the nation. We do so with Brian Deese. He's National Economic Council Director, of course, working for years with Gene Sperling. And what is most important here, and part of the act of Bloomberg surveillance and what we did with Bloomberg on the economy, is microeconomics matters. There's too many people out there blathering the big picture without the foundations under it. Mr. Deese knows from Middlebury 155 in economics, microeconomics matters. I would suggest the price theory is going in your direction. There's little indications that maybe the pain is over. Not all clear, but can you say there's some constructive elements out there that you see?
Well, look, to start out, prices are unacceptably high. We are also seeing some moderation, and that moderation is important. You've seen it in core PCE, the metric that the Fed traditionally relies on, moderation over the last 3 months, particularly compared to the prior. And as you mentioned, we're seeing for the typical American consumer, a little bit of relief at the gas pump. Prices down to about $4.75, down from, down more than 25 cents. But let's be clear, they're still unacceptably high. We've got a long way to go. And so we got to keep our head down and keep a focus on bringing prices down while not giving up all the economic gains that we've made.
One of our wonderful guests, Jim Bianco of Chicago, wore a whip inflation now button on the show the other day. You people have avoided the idiocy of the early 1970s. But with that, the president has to provide a morale boost to people hammered by inflation. How do you do that?
It's not just a morale boost. We have to act, and we have to show action on behalf of the American people, and that's exactly what the president is doing. He's saying bringing prices down is his top priority, and every day he's focused on practical things that he can do. So the release of oil from the Strategic Petroleum Reserve sounds esoteric to people, but oil market analysts you've had on this show will say it was single-handedly responsible for keeping oil prices going higher. Moving to work with the refineries to try to keep refinery capacity online, that is important and makes a difference. And as we're seeing, we're starting to see a little bit of that moderation at the pump. The president is saying, let's do more. Let's do everything we possibly can. He called for a temporary holiday for the gas tax. That's not going to solve every issue. That would make a little bit of difference as well. So you need a president who's going to keep at it and who's going to communicate clear to the American people that we are making progress, that we have made enormous economic progress, but that he's not satisfied and we're going to stay at it.
You're not satisfied either, but you've talked about a higher goal. You've talked about defending the world liberal order and that we had to stand firm. What did you mean by that?
Well, let's be very clear. That's a concept that Republicans and Democrats have embraced for years, and it's about democracy. It's about the democracy and the democratic tradition that grew out of World War II and that has served our national security interests and economic interests well. And standing up for democracy is something that this president feels strongly about. And so we are going to fight to bring prices down. We're going to fight to get increased oil supply on the market. But what we're not going to do is to suggest that the only way to do that is to actually step away from the Ukrainian people, to step away from fighting for democracy and everything that believes.
If standing up for democracy is truly paramount, and you've quite clearly just suggested it is, why is this administration considering removing tariffs on the Chinese Communist Party, which is anything but a democracy, and is also a government that you've accused of genocide? Why is that a consideration? And how does that reconcile with this view that this is about standing up for democracy?
Our economic policy should be about promoting economic security for American workers, American businesses, American families. And so we have to look at everything through that lens. In the prior administration, they took an approach to escalating trade tensions and a trade war with China that ultimately didn't serve that purpose, didn't help our farmers and our ranchers, didn't help many sectors of the economy. So President Biden came into office committed to the proposition that we need to get tough on China. There are places where we need to be tougher and clearer about their non-market practices, about their human rights abuses. But we also need to be smarter about how to do this as well.
Why is that smarter? And let's go back to the question again and lay things out clearly. You've accused the Chinese Communist Party of genocide. You're saying that what is paramount here is defending democracy, and that defending the liberal world order is more important than the pain that people feel at the pump. And ultimately, this administration is considering removing tariffs. I wasn't convinced by the last answer. I don't think many others will either. This is an awkward moment, I know, but I really need to understand from you why it makes sense for this administration to consider removing tariffs on a country that you're accusing of genocide.
First of all, I want to you mischaracterized my position, so I want to clarify.
Please do.
Bringing prices down for the American people is the president's top priority. He's focused on it every day, and it's because he understands the pain that people are feeling at the gas pump and around the kitchen table. At the same time, he does not believe that the way to do that would be to step back from our democratic values or to step back from protecting the Ukrainians against the invasion from Vladimir Putin. He does not believe that that is an acceptable or an appropriate choice. So, given that, our focus is on how can we actually advance the ball. And you're seeing the president in action right now doing that. The actions that he's taken around oil supply, the actions that he has taken around refineries, the actions that he is calling for around tax reductions, they all would make a difference, and they make a difference for American families.
Let's sit on China just for one final question and try and focus on policy, and I appreciate your follow-up answer. Let's talk about what you can do, because what we understand is that you're looking to remove some tariffs on certain goods, but perhaps double down the effort elsewhere. Can you give me a deeper understanding of where the current thinking of this White House is and the direction of travel for policy?
Well, there's no question that if you look at what the Chinese economy and the non-market practices that the Chinese leadership are undertaking, that there are sectors of the economy where they are engaged in unacceptable activities and that those present a strategic risk to our economy and our national security. And so those are the places where we need to focus on using all of the tools at our disposal. Tariffs are one tool, but we have other tools as well to make sure that we are protecting key sectors of the American economy and that we are holding to account for those. You look at something like semiconductors, which we've talked about before, and which is incredibly salient. We, of course, need to act here in the United States to invest in building our own domestic resilience, but we also have to take seriously that some of the actions that China are taking expose us more deeply, and we need to counter those.
Brian Deese, wonderful to catch up, the director of the National Economic Council. Tom, these are really complex issues that we have to work through right now.
They are a new regime. That's all there is to it. And just to look at the Philippine election and how we project to the Pacific is part of that Chinese calculus.
Looking ahead to payrolls Friday and perhaps another big CPI print.
Are we back in New
too.
York or are we here?
I understand we head to the airport straight after this and we fly to New York.
Okay. Oh, Teterboro, I think I can get into Teterboro.
You flying private?
Yeah.
I'm not. That tells you something about the difference between the two of us. Tom Keene, Jonathan Ferro, live from Washington, D.C. Thank you to all of you on TV and radio. This is Bloomberg Surveillance.